What is going on, everybody? Hope you're having a great day so far. Welcome back to another top buy, top sell video here in the A1 Edge Finder. The Edge Finder, of course, is our market scanning software, and I'm going to let you know right now that if you want the Edge Finder for yourself, you can do so by getting it in the link in the description and using code A1YT at checkout for a 20% off discounted price. Again, code A1YT for a discounted price at checkout when you purchase the Edge Finder. So let's go ahead and hop right into it. We're going to be taking a look at our top buys and top sells so far today in the Edge Finder. But let's see, we're going to start off by taking a look at the Smart Money Tracker. And here in the Smart Money Tracker, we're taking a look at COT data. And what COT data is, this is institutional trader data. This is what the smart money guys, hedge fund guys, the people who get paid to trade, this is what they are buying and selling. We have it organized here, most bearish to most bullish. And so we can actually see, this is a little surprising, but platinum is apparently the most bullish asset that we have in the Edge Finder at the moment. 78.99% long from institutional traders and 21.01% short. The Japanese yen, on the other hand, is the most bearish. We have 74% short from the institutional traders and 26% long. If we want to take a look at some other top or some other popular items, like we have the S&P right here, S&P 500, 37.87% long and 62.13% short. How about the US dollar is 68.28% long and 31.72% short. Let's check out a couple more. How about the pound? Currently 40.56% long and 59.44% short. And we'll do, how about gold and the euro really quickly? 72.14% long, 27.86% short, and lastly 70.61% long and 29.39% short. We of course also have all of these assets listed right here with their total long contracts, total short contracts.
Hey traders, would you like some help with technical analysis? Well, lucky for you, we're giving away a free technical analysis guide. That's right, completely free. It's an entire guide all around technical analysis. The guide includes subjects like support and resistance trading, MACD indicators, trend lines, candlestick pattern trading, RSI indicators, and much more. So make sure to click the link in the description, fill out that information, and we'll email you a technical analysis guide right away.
The change long and change short since this was last updated, and the percentage here as well for all of the assets. So that was a quick look into COT data. We're also going to check out retail sentiment really quickly. Retail sentiment is retail traders, the day traders, what they are buying and selling, and we have it listed by the currency pairs here. So I'm actually going to get rid of indices and commodities, and I just want to take a look at the currency pairs. We can see that CAD CHF is our top long when it comes to the retail traders. What retail traders are going long on, they are currently 88% long and 12% short on CAD CHF. If we scroll down to the bottom, Euro CHF is the top short, 9% long, 91% short. If we wanted to take a look at, say, some US dollar pairs, I could remove our minor currency pairs. Here are our US dollar pairs. Top US dollar pair is USD CHF, 72% long and 28% short, followed by USD JPY, then USD CAD. Down here at the bottom, we have Euro USD being our most shorted pair at 85% short and 15% long. So quick look at what institutional traders and retail traders are buying and selling. With that out of the way, let's go ahead and hop into the watch list, remove our neutral signals just so that we are left with our buys and sells. And right now at the moment, US 30 is technically our strongest buy, but I am going to remove the indices and commodities. I guess we have no buy or sell signals for commodities, so I'm just going to remove the indices at the moment. And that means that we are left with USD CAD as our top buy and GBP NZD as our strongest sell with a score of -7. So we're going to be taking a look at USD CAD as well as GBP NZD, which is this will be good because we're going to take a look at different numbers for 4 different currencies: the United States dollar, the Canadian dollar, the British pound, and the New Zealand dollar. So we'll get updated information on all 4 of those currencies while taking a look at 2 currency pairs, one buy, one sell. I normally start off with the buy, so I think in this video I'll start off with the sell. GBP NZD, strong sell bias, score of -7. So yep, like I just said, strong sell bias, score of -7. COT data and retail sentiment both come out to scores of -1, and we can take a look at that information right over here. This is that COT data that we were just talking about, so we can see that the New Zealand dollar is currently 69.43% long and 30.57% short from institutional traders, and the pound 40.56% long, 59.44% short from institutional traders. Retail wise, we are 62% long and 38% short. So institutional traders going long on the New Zealand dollar, short on the pound, and retail traders are slightly favored long on the pair as a whole. Our seasonality is a score of +1, and we can see here that in the last 10-year average as well as the last 5-year average, historically speaking, in the month of January, this pair tends to perform pretty well. It is typically bullish in the month of January according to this historical data. We can see that the current year average is slightly below that 0 line, meaning that so far this month it has not performed very well, or it has been a little bit bearish. If we take a look ahead, however, we can see that in the months of February and March, this pair actually does turn very bearish, historically speaking, and make some moves to the downside. So if this continues to be a strong sell throughout the month of January and into the month of February, we could be kind of following with this trend, historically speaking, especially looking at the last 10-year averages, where throughout the beginning of the year, January, February, and March, historically speaking, this pair tends to fall. Our trend reading is a score of -2. We can see here that we had a really strong downward move starting on December 28th and moving all the way down to December 2nd before it shot back up and met up with this same level right here, but then came back down, and currently price forecast based on all of the different metrics that we are tracking in the Edge Finder does predict that this pair will continue to move downward. And if it does, these are some price points that we could see it being around. So if we are staying on the same trajectory that we have been on, this orange line right here in the middle is possible price points. If it pops back up a little bit going into tomorrow, this is a price point that the Edge Finder says could be possible. If it pops up and then goes down, these are some more price points here. And then if it shoots down even lower, then we are looking at these price points right here. Our fundamental section right down here, GDP growth, inflation, unemployment, and interest rates all have scores of -1. So the New Zealand dollar is currently beating out the pound in all 4 of these fundamental metrics right here. So let's get into these numbers. GDP growth is -0.3% compared to the New Zealand dollar's 2% GDP growth. Pound unemployment 3.7% compared to New Zealand's 3.3%. Pound inflation currently at 10.7% compared to New Zealand's 7.2%. And lastly, interest rates on the pound are 3.5% compared to 4.25% for the New Zealand dollar. Lastly, really quickly, I want to point out the scanner output summary is a written summary that gets updated as these numbers change, because it is explaining how we score these things the way that we do. So if you have any questions about why something is getting a -1 score or a +1 score, you can pause the video and read really quickly down here and get a written explanation for why we score these things the way that we do. But I'm going to go ahead and move on to our top buy of the day, which right now is USD CAD. with not a strong buy bias, but a solid buy bias nonetheless, with a score of +5. So let's get into these numbers right here. COT data is a score of +2. Retail sentiment is actually a neutral or a 0 score. So taking a look at the sentiment section, institutional traders currently 68.28% long, 31.72% short on the US dollar, and 32.79% long, 67.21% short on the Canadian dollar. So clear favoritism long side on the US dollar and some clear favoritism short side on the Canadian dollar. Retail sentiment, on the other hand, is 56% long, 44% short. So pretty close to 50-50, and that's why it's getting that neutral score there. Like I just mentioned, the scanner output summary will explain why we score these things the way that we do, but I can explain really quickly that the reason that this is getting a neutral or a 0 score is because it has not crossed a 60% threshold. It has not crossed over 60% on the long side or the short side for that matter, and we do not consider something to be long or short until it technically crosses over a 60% threshold. That way it is clear and obvious which way it is trending, either long or short. So even though there is a slight bias towards the long side for the pair as a whole, until it crosses over 60%, it will not be considered long or short in the edge finder. So seasonality is a score of +1, and our last 10-year average and last 5-year averages look very different. We can see that in the last 10 years, it does currently, or it is sitting slightly above that neutral line right here, meaning that our last 10-year average price points are bullish for the month of January, just a little bit though. Our current year average is sitting right on the line, however, so it's been pretty unchanged throughout the month so far. The last 10-year averages, however, show that it has been very bearish in the last 5-year averages. The last 5-year averages show some bearishness in the month of January. But again, looking ahead, we can see that in the month of February, historically speaking, both in the last 10-year and the last 5-year, we see a jump up here, and as if this continues to be a buy, then that would be following in that same trending direction. Historically speaking, moving from January to February, this pair does tend to do better. Our trend reading is a -2, so this pair has been trending down. COT data is pointing it towards a buy. Our fundamentals are definitely pointing it towards a buy, but it has been trending down over the past couple of weeks. We can see here that ever since December 26th, it has been making moves to the downside up until a couple days ago when it started to come back up a little bit, and based on some of this fundamental data and some new current news events, perhaps this pair will see a turnaround. Speaking of fundamentals, we have GDP growth, inflation, unemployment, and interest rates, all with scores of +1 here. So we can take a look at that. So Canada's GDP growth is at 0.7% compared to the United States, 3.2% GDP growth. Canada's unemployment 5% compared to US 3.5%. Canada's inflation currently at 6.8% compared to the US 6.5% inflation. And lastly, interest rates for Canada 4.25% compared to 4.5% here in the US. All right, so that was a quick look at our top buy and top sell that we currently have listed in the Edge Finder. Remember, if you want the Edge Finder for a discounted price, you can use code A1YT at checkout. There is so much useful information here, like the market heat map that shows you how every asset in the Edge Finder has been trending so far on the day. You can see here all of our yen pairs down on the day, pretty much all of our major indices up on the day so far. Oil is our biggest mover to the upside so far today, up 1.91%. So yeah, super useful tool. You can find it down in the links in the description.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.